Okay. Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, event number 205. This is the, I think, 8th of the new live charting multi-analyst format. And so we're looking forward to another great event. I've arranged for 6 analysts today. And of course, all sessions will be recorded individually, and those will be available on the Timing Research site. And you can also search for Timing Research on YouTube, Substack, or your favorite podcast app. And of course, all presentations are for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor and only trade with money you can afford to lose. So today, I arranged for Valerie Fox to be our opening analyst for this event, and I'm going to go ahead and turn it over to her.
Hello and good morning, everyone, or good afternoon in my case, since I'm on the other side of the world from America, but we've got lots of people live on the call. This is Analyze Your Trade, so we're going to dive right into the charts in a moment, but I want to make sure everyone's awake and present here. We've got many of you live on the call. So let's start by go to your chat box and change it to everyone, but I'd love to hear where everyone is from. Where are you calling in from? Type it in the chat box. I think it's always super, super fascinating. In most cases on these events, people are from all over the world, and I just love to see who we have represented. So we've got UK, Louisville, Kentucky, Canada, Singapore, Camas, Washington in the USA. Amazing. So even with those first few responses, we have many countries and continents in the world covered here. Portland, Oregon. Fantastic. I am calling you or presenting with you guys here out of Portugal, actually. So I live in Madeira, but I'm currently on holiday in the Azores Islands, Santa Maria Island specifically. So we got South Africa on the line, Pretoria, fantastic. Another Canada, love it. So many people. Has anyone been to the Azores before? I always find this fascinating too. Anyone been to the Azores or Madeira? Some beautiful, beautiful Portuguese islands, if that's something that you enjoy. Okay, well, welcome. My name is Valerie Fox, as David mentioned. I'm actually a Forex trader myself. However, I know a lot to be dangerous about many markets, and I'm a technical trader myself. So a lot of really most of the technical analysis flows through to all markets. So I find these calls super, super fascinating. I love kind of taking a peek with you guys at some of the other markets that I don't normally trade. Like I said, I've been trading for over 12 years. As a trading coach, I've been helping traders I'm going on 4 years here, which has been super fun. I started a coaching business after I retired myself from corporate America in the US. And I've also written a book called The Self-Reliant Trader Method. And I have a podcast as well called the Trade Focus Podcast. And you can connect with me at TradeFocus.com if you ever want to connect. I have a chat feature on my website where it goes directly to my email inbox. But what we're all here for today is to look at some charts. So I am going to pull up Trading View just for purposes of getting a singular view here of many markets. And the whole point of this call is to do some live chart analysis. So if there's something you'd like me to analyze and give you my thoughts on, post it in the chat. There's obviously a variety of markets that can be traded in indices and stocks and futures, etc. CVS is the first one. Okay. Tell me, with CVS, what kind of trader are you? Are you a swing trader? Are you a day trader, an intraday trader, a scalper, a micro scalper? Because that will impact the time frames that I look at. So for some of you who aren't familiar with day and swing trading. Okay. So let's first look at, I like to do top-down analysis. Let's switch to CVS first. Get to the right charts here. Okay, CVS. Let's go up to the higher time frame. Like I said, I like to get an idea of what's happening kind of on the larger time frame. So looking at the monthly chart, you can see most recently we've been in a pretty steep decline here. We were in an uptrend prior to that. Now we've rotated back to a downtrend, I would say, kind of on that higher time frame, bird's eye view of what's happening. And I also am very much a price action trader. So I tend to look at swing highs and lows. I look at support and resistance. I also have a lot of experience personally with reversal candle sequences and also candlestick patterns. So is there a certain way, and also I've used indicators in the past as well with my own trading. So the person who suggested CVS, is there a certain way that you prefer me to analyze the chart for you? If not, I'll just go with my natural instincts here. I would say overall on the higher time frame, we're in a downtrend. As a day trader, well, let's do higher time frame. As a swing trader, I would look at the monthly and I would look at the weekly from my higher time frame perspective. Both of those are in a downtrend for sure in terms of direction. So, when we think about trading is all about finding an edge. And the way we make money trading is by finding an edge. And ultimately, from there, it's just all about refining your entries and your exits, right? Whether a trade makes money or loses money is purely a matter of your entry and exit price and the direction that you're trading. So the monthly and the weekly charts are both in a downtrend. So that would lean me towards, depending upon what qualifiers you're using and how quickly you're wanting to get in and out, I would say be looking for some sell opportunities. And as a swing trader, and for me, that means you're in and out of trades between a day to maybe a week or two. So I would trade personally off of the 4-hour chart to do that as a swing trader, specifically meaning, again, that you are in and out of trades. You can stay in a trade longer than a day, maybe up to a week or two. So definitely, obviously more recently here in a downtrend. If I zoom out here a little bit on the 4-hour chart, so far we've gone above this little bump here, but overall, I'd say we're still in a downtrend. We're getting a little bit of a slower downtrend. Right here, we have a little 4-hour. Let's go up. I like to get support and resistance zone from my higher time frame. So on the 4-hour, if you go up 2 time frames, so that would take us to the weekly chart. That's a good place to find some support and resistance. And wow, if you look right here on the weekly chart, looking left, we're bumping up against some previous support. So the question is if this is going to hold through. So if I was trading CVS as a swing trader, let me add a line here so you can see what I'm talking about. That's not what I want. I want a horizontal ray. Here we go. So from the close price of this red candle, I would draw a horizontal line across. You can see price is currently hitting this perfectly. So the thing about trading, in my opinion, is that you should have a way to qualify trades where you don't have to guess. You just need to let price show you the way it's going from a technical standpoint. So for me, right now is not the right time to sell this because it's currently bumping on support or a prior support zone. So, and prior resistance right here as well. So this is a really strong level that price reacts to. So the question is this going to bounce and then transition back to an uptrend, or is it going to go through it and come back? So for me, I would not sell this. Excuse me. Let me just add a couple of lines here to show you. I would want to see price come below it and then come back up and retest it. And that is when I would want to sell. So I would be closely monitoring this at this level on the 4-hour chart. So this is the same line. You can see that price did come down and it did retest it but I'm looking for a deeper sell here, right? So we'd want to see it make a lower low below here, and then on the 4-hour chart, come back up for a retest to go down. So at this point, at the swing trading level, I'd say it's kind of a watch. It's on the watch list. It's at a key level on the weekly chart. And from there, we want to see we're getting a doji formed here, which this candle's still in progress on the weekly chart. So a spinning top or doji basically has a long upper wick and a lower wick, and then a small body in the middle. That's showing some indecision here on the weekly chart. This is still in progress, though. We won't know. Excuse me, I have a little cough. We won't know how the candle finishes from a candle action standpoint. But right now we're seeing some indecision, probably because of this support and resistance zone to the left on the weekly chart. So we need to see what happens. Again, on the 4-hour chart, what I would personally want to see before I enter this, first of all, if it goes up above this level here, above this high, then I would say it's starting to rotate higher. It's a bad time to have a bit of a cough, goodness. So let me give you a more specific here. I'll draw some lines, kind of representative of potential. So if price were to come down and make a lower low, doesn't have to be this deep, but even if the wick goes beyond this wick, then that would be a good time to sell, because you got a lower low beneath this level. Price would be likely to come up and retest and go further down. If, however, from here, price makes a higher high, or definitely goes above these levels, if it goes above that level for sure, that would be a rotation up. And in that case, it's looking more like a reversal candle or a reversal handle pattern. Excuse me, getting choked up. And if it goes up beyond this level here, then to me, that is looking like it's more likely to respect this support level from the weekly chart. And maybe it's going to transition back up a little bit for a deeper pullback. So if it goes above this, then I would be more looking at a buy, because this is a head and shoulders formation if it goes above this, right? So here's the left shoulder, here's the head. If it goes above this, then you could do a pullback either to this level here, which is a great level, maybe add a little buffer and enter above it for a buy. Excuse me. So really it's just a wait and see. Hopefully you can see how easy it is, though, to use some support and resistance levels and trade either in alignment with the trend, or if you get a pattern that sets up, you can also trade counter trend as well. Was that helpful for the person who asked about CVS? Excuse me. That's at the intraday level. I'll also cover the day trading level, which would be more like trading on the hourly chart, or maybe even on the 15-minute chart, if you wanted to really be in and out of the trade on the daily. So let's look at that. So really, when you go from intraday trading, which is where you're holding trades for a longer period of time, down to day trading, the principles are the same. It's just the time frame that you're looking at are different. So you're going to use lower charts, the smaller time frames that you trade on. Excuse me, I'm just going to cough and try to get this out. I'm going to put it on mute for just a moment. Okay, sorry about that. Okay, so that was the intraday trading off the 4-hour chart. Let's go down a couple time frames and see what's happening. So if I was looking at a day trading chart for CVS, I would start. So thank you. When would you consider long? So as I mentioned on the swing trading, if at this level, let me go back up and add I like to use support and resistance from those higher levels, like I mentioned. So zooming out a bit on the weekly chart, I would consider going long. If you find the close price on this weekly chart here, the yellow line now, price is there. I would consider going long when you go down to the 4-hour chart. If we get a proper head and shoulders, which means price would need to go above, for me, above the wick of that high right there. This wick right here. It's from a gap, but to me, from this left shoulder. So really what we're looking at is a head and shoulders pattern, where we had this down move here, and then we got a bit of a neckline here, the left neckline. It's an inverted head and shoulders. So we have the left shoulder here, we have the head. So what I would want to see happen for a buy opportunity price would need to go above, at least with a wick, above this wick right here from, I don't know what time, this is UTC time zone. So this wick from Friday, May 5th. It would need to go above that for me. And from there, you would wait for the pullback. You could enter at this weekly support and resistance line, like give a buffer. So at intraday trading level, maybe give a 4 or 5 pip buffer above this line to front run it a little bit. Or you could just enter at this left shoulder as well. So the neckline of this left shoulder, you could maybe enter here. Again, with a little bit of a front run. So go a little bit above it by a couple pips. Or basis points, I'm sorry. So this would be the buy zone after this gets breached, this little neckline. Hopefully that's helpful. Let's look for, when you go down to the day trading or intraday trading, those setups are going to happen more quickly or more frequently. So if you're looking for a long position on CVS, let's look at what that looks like. Okay, so when I trade at the intraday, let's just say, let's start at the 1 hour. So if you're actually going to be trading off the 1 hour chart, going what I consider to be 2 time frames, let's go up to the daily chart and get an idea of trend. The daily is also down, which is no surprise since we looked at the monthly and the weekly being down. In terms of the daily chart, we're making lower lows still, we're making lower highs. So we're definitely downtrending. We have a partial head and shoulders forming on the daily chart like we saw on the 4 hour, except the timing is a little bit different, right? So let's go down to the 1 hour chart and see how it looks there. You can see that the head and shoulders is already forming. Let me mark my support and resistance line on the daily chart. So this is definitely a level that was tested. Let's see when we go back. We probably have to go back quite a ways to find that where it was historically. But yeah, this is a great level right here. We've tested it. We've come up a bit. If I was going to day trade, or I'm sorry, intraday trade it, we need to go down the 4 hour chart. So first and foremost on the daily chart, this is an engulfing body candle. So a couple days ago, we had this big move down and then price reacted at this level pretty strongly. So when we talk about understanding candle sequences and reversal candle patterns, this is a good sign. Again, nothing in trading is about prediction. It's about probabilities. It's about finding an edge where you have a higher probability of one outcome over the other. It's never guaranteed, of course, as everyone knows with trading. But this is a good response. When price got down to this level, which is also pretty in alignment with the level on the weekly chart, when price got down to this level, we got a big reaction up, right? So that's good. This is called an engulfing body. And that's a reversal candle sequence that lets you know that this level has a decent chance of being respected, meaning that it will hold and price will continue up. So that's something good to see on the daily chart. Excuse me. Okay, here we are on the 1 hour chart. We already have our head and shoulders, and we already have the official rotation. So we have the left shoulder here. Price went up. There's the neckline. Here's the head. And we've already gone above that neckline. So for me, this is already qualified as a head and shoulders to buy. So we've already breached this level right here. Price is pulling back. In this case, the left shoulder is pretty high, so I wouldn't enter way up here. I like to enter closer to the head. And personally, I like to use Fibonacci's for my entries. Oop, not an indicator. I would grab the Fibonacci tool here and draw it from the head to the right neckline is what that's called, using the wicks. And this is the 61.8 retracement. That is where I would enter. So price hasn't quite gotten there. It came close about 13 basis points away, but it didn't hit it yet. So for me, I would have a buy order here as a day trader of CVS. That means you're in and out of the trade pretty quickly, normally in a day, maybe 2 days, depending upon if you're comfortable holding trades overnight. Was that helpful? Give you a moment. I'm gonna take a moment. Thank you, Kareem. I was just gonna say that. I'm gonna take a water and hit mute here real fast so I can do another cough. Okay, back at it. So that was a look at the swing trading and also at more of a day trading intraday level. You could also use lower time frame charts as well. Like you could go down to the 15-minute as well and do a similar analysis from a top-down standpoint. Let's see, there were some other symbols. So I'm going to scroll back up. We got Cliffham. We're going to do MDLZ. So Cliffham, tell me, what kind of trader are you? Are you an intraday trader? Are you a day trader? Are you a swing trader, position trader, scalper? Give me a little more insight so I can look at the proper time frames for you. Excuse me. It's really funny. I had like a brief cold a couple days ago, but I've never struggled with talking, I guess, because I went from not presenting to presenting. Okay, long term for the stock. I worked there so you have a ton of options and deferred stock. Okay. So let's do a top 10 analysis. I'm going to go even higher. Let's look at the 12 months. So this is basically an annual chart. Wow, it's been in quite an uptrend for many years. So I don't know when you got your stocks, but you've potentially done quite well with this. So strong uptrend the last since 2008, you've just been, for the most part, except for this little pullback, going up, up, up. Let's look at the monthly chart. So on the monthly chart, excuse me, clear uptrend. Right here, you saw a little rotation break. So for me, this was maybe a little concerning that you might be transitioning to a downtrend with this drop here, getting a lower low. But then you're back in the uptrend again. So right now, the monthly chart is still in an uptrend. And then let's go to the, in terms of longer term, had we been looking right here, when this happened a couple months ago, back in September of last year, I might be saying, you might consider potentially locking in some profit on some of the trades you have or some of the positions you have. But now that we have this upswing again, you're making higher highs on the monthly chart in a meaningful way with some very strong candle action. Unfortunately, we don't have much support and resistance history for this stock on the higher timeframes, because ultimately, when you go back to the annual chart, you're in uncharted territory. So in terms of prior support and resistance to be used, we can't really, we don't have anything to use. Let's look at the weekly chart. The weekly chart is still going strong as well. So this is that pullback we had on the monthly chart, just broken out into weeks. And then, yeah, now you're making higher highs again on the weekly chart, higher lows. So, so you're in a strong upward at the moment. I would say that definitely might be good to lock in some profit, but at the moment, you're not seeing signs of a pullback in these higher time frame charts. What you could do potentially, I'm definitely not a long-term, I'm more of a swing trader myself. So I'm not as much into like investing and buy and hold. But if, for example, on the daily chart, if you kind of watch it on the daily chart, so you get a new candle every day, I would expect price maybe to pull back and retest this. If price comes below this level here from April 14th of this year, if it goes below this level, that's probably an early sign that you could get a bigger, pullback and period of consolidation. But if it stays above this level, it definitely, you could continue to hold it and see on the daily if it continues to uptrend. Is that helpful? Oh, I see your question here. Do you put any indicator on your chart or just like that? So for me, I prefer naked charts is what it's called, where I just use price action and swing highs and swing lows. If you wanted to use price action with a little bit of visual assistance, I would call it. There's something called the Williams fractal that you could add. And basically what it does is it plots, if you're not good at seeing swing highs and lows, what it does is it puts an up arrow at what's called a swing high. And it puts a down arrow at a swing low. And the way that that's defined is when there's an up arrow, this is the highest wick, 2 candles to the left and 2 candles to the right. So that's how it earned the upward triangle. The opposite is true for the downward triangles. This is the lowest lower wick, 2 candles to the left and 2 candles to the right. So like on the daily chart, you had a lower high, but you didn't have any lower lows or anything. So what I would be paying most attention to is when the lows go lower. Specifically, for now with these charts, if you get a lower low below this part, that would be when I would personally maybe lock in some profit. Certainly no harm in locking in profit at the top either. But, this could continue on up. So wait for signs. If you start getting lower lows, like if price does something like this, even above it, could be another opportunity. If you get like a low here, and then price kind of gives you a lower high, where things are starting to kind of just give you a complex pullback even, where then you have a low here and then you get a lower low, that could be another time to lock in profit before it goes all the way down here. So you're welcome. Thanks, Cliff. That was a great question. But for now, it's seeming an uptrend. If you wanted to be a little bit more of a what I would call micromanager about like kind of trying to pick how to monitor this potential pullback, you could also do the same thing on the 4-hour chart. So on the 4-hour chart, this is more like, intraday trading though. There's day trading here, or swing trading, I'm sorry, using the 4-hour chart. So we already have the lower low here on the 4-hour chart. We still haven't breached what would be this low. So, I'd kind of be watching this guy right here. Before this highest high, this was the prior low. So we're technically not in a rotation down until we go below that. So, and we're still well above it. So it's up to you. This is a great price to lock in profit though. Or you could wait to see if it pulls back. Okay, let's see. The other thing I know a lot of people use, which can be helpful, is like a 200-day moving average. I don't use that for this kind of just overall direction, but you certainly could. So like if we go back up to the daily chart, if you want something that kind of just is a little bit easier to see, you could add a moving average on higher time frames. A lot of people use like a 200 moving average. We just change the setting here to 200 periods. So 200 period, yeah, you're definitely in an uptrend, as I was saying. Oh, SMA 5. Let me make sure. Length. I don't know. Maybe I need to do that too. Okay, so yeah, we're well above the 200 moving average. It will, as the candles progress, try to get a little bit closer. You could even look at that on the 4-hour chart as well. So still well above this. The slope of the 200 moving average is still up. So that means we're still in an uptrend, which aligns with what I said earlier. But that could be something, or you could also do like EMA crosses. So maybe instead of doing the 200, you could look at more of like a 50 and a 20. I don't know what the difference is here between these two. I don't use TradingView. It's very similar. I use Oanda, but this is very similar. So we've got the 50 moving average, and I'm going to add a second moving average, which is the 20 moving average. Oops. Getting carried away here. I've used all these in the past with different trading trade plans, but so there's, it depends kind of what you're looking to time. And let's change the color of this one so we can, let's do it orange. So the 20 is in orange, which is kind of the leader. So the 20 is still above the 50. So again, signaling we're still in a pretty decent uptrend at the moment. You're starting to see this level off. So here they were both on the incline, which is a clear indicator of an uptrend. Here it's starting to table off. So if you see this start to nosedive, but especially if it crosses below the 50, if the 20 crosses below the 50, that could also be a good time to sell and lock in some profit. And maybe you don't do the whole position, right? Maybe you just take some off. Okay, let me go up and see what another one is here. Awesome. I'm glad you enjoyed that, Cliff. Okay, gold. Let's look at gold. And I might need to blow my nose again. So give me just one moment. Okay, let's take a look at gold. So for gold, we'll just do a top-down analysis of what's happening here. I'm going to just hide these for now. We can add them back later, but let's look at pure price action because there's something really amazing about using just the candlesticks and reading them. So let's start at the yearly candles. So gold is definitely in an uptrend. We have these big moves up. We had a little pullback, another big move up. We're making higher highs. So if you look here, well, I don't need to do it, but basically here we have a high, we have a high, we have a high. They're all getting higher. And the lows, the low, the low, the low, they're all getting higher as well. So higher highs and lower low indicate an uptrend. So this is the yearly chart. Let's go down to the monthly chart and see what's happening. On the monthly chart, so coming into this point right here, we were in a definite uptrend. Higher highs, higher lows, price was just steady moving up. Then we had a little period of consolidation here where we had a little bit of a lower high and lower low. But so basically we never, in terms of an official rotation on at least the monthly chart, since at this point, we didn't ever rotate below this. So for me, up until this point, we were still in an uptrend, even though we had a little bit of pullback here. And then as the candles progressed, we have gotten a little bit of a lower high there and then a lower low. So at this point, you kind of begin to question if gold was going to go down further. If you had bought down here, that may have been when you might want to lock in some profit. But since then, at least on the monthly chart, we've gotten a new higher high right here at the beginning of this month. So we're getting a higher high on gold. Now we have to wait and see what happens. I think we still need a little bit of confidence whether, is this a triple top that's going to get blown through? Or is price going to give us a new lower low? So in terms of gold, at least on the monthly chart, just kind of a bigger picture vantage point. If gold drops below, 1600 here, we're probably in some sell-off territory for sure. If price pulls back and then makes a higher high, then I'd say we're back in uptrend territory. So that's kind of just a big picture. Is there a smaller time frame you'd like me to look at? I can't remember. GD Bragg, is there a smaller time frame you'd like me to look at this? I'll give you a second to type. I know sometimes you're like, I'm trying to type. Ooh, the 5 minute. Okay, let's talk about some micro scalping. So if we're trading on the 5 minute chart, that is scalping or micro scalping. So again, I like to go up a couple of time frames to get a bigger picture vantage point. And that's the thing about trading. It depends which time frames you're looking at. So, I just looked at gold and I said, basically we're still in an uptrend, although we're experiencing a little bit of consolidation, but we just got a higher high. We didn't rotate down below the lower low on the monthly chart. So big picture wise, we're in an uptrend. Honestly, that information is completely irrelevant if you're trading on the 5 minute chart. It's a good vantage point. But when you go down to the 5 minute chart, there's a lot of movement that happens on the 5 minute chart where you can trade with the higher level trend, you can trade against it, and there's plenty of trade setups in both directions. So if you wanted to trade with a trend where you're placing your entries and exits off the 5 minute chart, I always recommend going up 2 time frames. So in this case, the 5 minute, the first time frame up would be the 15 minute, and then the next one would be the hour. These are just some extra ones in there. So I would look at the trend on the hour chart. On the hour chart, we're in a clear downtrend, getting lower highs, lower lows, strong movement here. If you look left, let's see if we have any support and resistance levels that price is currently approaching, but kind of zooming out, looking left. So we have some levels here. Is there a certain direction you're wanting to do with gold? Are you wanting to lock in profit on a position where you've bought, or are you looking for opportunities to buy in further? Give me a little background on what you're trying to identify here, because here's what I see, just not being partial to any specific direction. You're looking for a buy-in opportunity. Okay, cool. So I see that level. I see, and I'm a support and resistance trader. I see this level. So what I'm doing is I'm just placing horizontal lines at the close price of the left candle where price changes direction. So this, where it went from red is a down candle, green is an up candle. I'm just putting a horizontal line at the close price of the first candle. Same here. This is, this one's okay. This one's better. When we think about support and resistance, we really don't care about the motion going into it. It's more about the reaction from it that determines if it's a strong level. So here, Price was coming down, but then look, it took off and it made higher highs, higher lows, blew past all this, blew past all this. So this is a good reaction point. The same is true here. Price came down historically and then really reacted off, making higher highs above that, and then obviously going much higher. So these are levels that I would be watching. There's one a little bit lower from the 1 hour chart. Okay, and if we go back to where price is today, excuse me, sometimes you have to go back far to find prior support and resistance levels, and sometimes you don't. So at the moment, price has blown through this level and it's approaching these levels. The question is then, what does it do on the lower time frame charts, on the 5-minute chart, when it hits these levels? And that's really where patterns come into play for me. So I would go down to the 5-minute chart and I'll show you what I would want to see. So on the 5-minute chart, around this level, what has happened so far? Excuse me. So price came down. We did get a little bit of a higher high, but for me, I'd really want to see a rotation, meaning it would have had from this prior lowest point. From the lowest point, you look, this is a low, you'd find the high. This is the high before it, which it definitely did not breach, but it has since given us a new lower low. So the high that would need to be breached is up here. So what I would be looking for, if I was trading gold on the 5-minute chart, is for price to go above this level with at least a wick. Excuse me, I'm not just trying to move my arrow to flatten it. Okay, so I would be looking for price to move on up, to breach this, give me some evidence, right? I like evidence. I like to have an edge. So the edge in this case is that even though we're in a strong downtrend, on the hour chart, we're approaching this support and resistance level. That's a meaningful level on the 1 hour chart, which is 2 time frames higher than the 5-minute chart that I'm trading on. So what I'm saying is, I believe I have an edge when trading on the 5-minute chart. If I hit and react to a support and resistance level from the 1 hour chart when I'm trading on the 5-minute chart, we've hit this level. Now we need a pattern, which I like to see the head and shoulders pattern, in this case, an inverted head and shoulders. So for me, excuse me, this darn cold is driving me nuts. Let me just get a little highlighter. That's the left shoulder. This is potentially the head, although it's still in progress, so we'll have to see where it goes. So we need to breach this neckline, meaning I would need to see, and this is a 5-minute chart, so this could happen soon, right? I would want to see price go above this level. And from there, I would put a pending order. And, you know, you could either put it here, but really, depending upon how far it goes, you could put it just at the neckline of this, only after this gets breached, right? So you could put it at the neckline of the left shoulder, which would be right about here. So we would need to see this happen first, and then you could put a pending order for a pullback here. So what this is saying is price hit it, it reacted up, it went down still, but then the buyers would push this up above this, giving you a higher high. So that's kind of like a confirmed rotation. And that is what I'd want to see to say, okay, we're at a key level of support and resistance on a higher time frame. We've rotated up on the entry time frame. Now I would place a buy order, but until this happens, I would not buy, because what might happen is price might come down here and test these levels, because these were also meaningful support and resistance levels. So let's talk about what happens there. So we're in this waiting game, in my opinion, if you're trading gold on the 5-minute chart, because what might happen, price might push down to one of these, in which case then we just wait for a head and shoulders pattern, which a head and shoulders, an inverted head and shoulders in this case, looks like this. Price is going down. And then, you know, you get the first bounce, I'll call it. And and then you get a lower low. So here's your left shoulder, here's your head. And then the right shoulder goes above. And then from there, you would be entering here, close to the left shoulder for a buy. So this means the support and resistance style can't be used in algo trading. I don't know what that means. I don't know there's all kinds of algorithmic trading out there. So I would probably have to be a little bit more familiar with what you mean by algo trading in order to answer that question. There's certainly ways you could program head and shoulder patterns in algorithms using like the Williams fractal, like I showed earlier. So if we just add the Williams fractal to this chart, excuse me. So you can see here, we have this lowest low right here. And we have a high. And then if once two candles to the right form after this might be a lower low. So as long as you could define that, like a head is the lowest low, the left shoulder is the prior low that's higher. And then you'd have to go above the recent, high. So I think you could use Williams fractal, or there's other ways you can define with candles. I could totally be misunderstanding your question as well. So for me, we're in a wait and see, right? On this one for a buy opportunity on the 5-minute chart. And that's half the battle with trading, is you have to have what your setup is. And then you have to wait until you see it. And that's what gets a lot of traders tripped up, because they don't want to wait. Okay, are there any other symbols you guys would like me to take a look at? I'm going to scroll back up. Maybe I missed one. Gold. Any stocks? Anything else? Do I trade futures? I don't personally trade futures. I'm a Forex trader, but these same principles could apply to futures as well. Okay, let me look at Tesla, and then I'll go to the next one as well. Tesla. So let's see, Paul. Tesla. Paul, did you have a certain time frame you want me to look at Tesla? Days. But are you, Paul? So I'll call that swing trading if you're looking to see kind of what's happening. So let's do a top-down analysis on Tesla. Let's start at the year, the 12-month chart. Let me reset this. Reset chart view. Okay. So at the yearly level, we're technically in an uptrend on Tesla, even though we've had this big pullback. We obviously don't have a lot of history for the moment. So let's go to the monthly chart. On the monthly chart, we were in an uptrend, but now we're in a downtrend on the monthly chart. So we're making lower lows, lower highs. We've breached this low here. So definitely in a downtrend on the monthly chart. Let's also look at the weekly chart. So in the weekly chart, we're in a downtrend holistically, lower highs here, downtrend, lower lows. We have these kind of like a complex pullback here, but even within that, we're still getting lower lows. I would say for the moment, we are definitely in a downtrend. If I didn't have these fractals here though, I would look at this as a swing high without the fractals, just kind of with my naked eye. And I would say you could maybe consider that to be a rotation. But there's just a little baby shoulder here. So really, since this is counter trend at the moment, if it were to be going up, I would say I would want to see, are you looking to buy or sell this, Paul? Oh, the yearly chart. Buy. So for a buy, on the 1 week, I'd want to see it breach this level first. So we have some strong support, prior support here on the weekly chart. You can see it's kind of bumping up against that at the moment. I'd want to see it kind of establish itself above that level. So right now you can see this was prior support. Price kind of fumbled around here, then it drops low. It's come back up for a retest and it's making lower lows at the moment. So I don't think this is a buy until it goes above this level. And likely above this wick as well. So it's not enough just to like peak above it. You definitely would want it to close above this level on the weekly chart. Or you wouldn't, this is again, just my opinion of analyzing the chart from price action. But I'd want to see it pop above this with a wick at least, and then I'd probably buy on the pullback to this support and resistance level. So if something like this happened, it's right here. Let's say it goes above that level for us. I would be waiting for it to then pull back, front run this a little bit here and maybe pull back to here, and then you could buy to go longer. But there you have a clear higher high and, the weekly trend in your favor. You could also look for that to happen like on the daily or the 4-hour chart. So on this daily chart, we're seeing obviously all the daily price gaps and the weekend gaps. But even on the daily chart, we're still making lower lows, lower highs. This is definitely in a downtrend still. Let's go to the 4-hour. You're in a bit of an uptrend on the 4-hour. So Paul also asked, when would you sell Tesla? Okay, so let's clear all these lines, start with a fresh chart. I'm going to go back up. So selling Tesla, would you say that you are how long do you hold your trades? Is it like days, weeks, hours? Give me a little, because that makes a difference with which charts I look at. And if you can't tell, from this entire presentation, we're almost out of time here, but knowing how long you want to hold your trades between your open and close does make a difference for which charts you use and how you identify your entries and exits. So, I help traders a lot with refining their trade plan, getting it documented, figuring out what kind of trader they are, what suits their personality style. My website is tradefocus.com and I sell a book that goes through all of that. It's only $5. Feel free to check it out. So you're looking to hold things. Oh, thanks, David. He put my website link there in the comments. So in terms of selling, if you hold trades weeks, we'd really be looking for entries and exits on the 4-hour chart. So as I mentioned, if you go 2 time frames up, the weekly chart is in a downtrend already. So let's look at some weekly support and resistance levels. So let's see here. Let me grab an arrow. So this is a key level right here. I don't want that one. I want the horizontal ray. Here's a key level where if price were to go below that, come back up for a retest, that would be good. Up here a little higher. We're kind of at this level at the moment. Right here, the close price of that candle is what we're kind of testing. So if we go down to the 4-hour chart, I want to see a pattern, a head and shoulders pattern around that level, which we actually already have at the moment. So if you look closely, you can see this is the head. You've got that. That's the neckline. You could use either one of these, but ultimately this is the left shoulder. Price came up, gives here the shoulder here. We have a higher high. Here's the head. Here's the rotation. It went lower, right? So it went below this level here, which is what you want to see. And price has pulled back up to the entry area. This is the higher time frame monthly support. If you were to enter based on a sell order, based off the left neckline, it would be basically right there. So in that case, based on the 4-hour chart, we have a verified head and shoulders, and price is almost at the sell point right now where you could sell that. You would want to put a stop loss above this head. So figure out what your buffer is on the 4-hour chart. Definitely 12 points above. You want to give yourself a buffer in case it goes back up to retest this head. This is about probabilities, right? And you want to protect your money. So you should always be using a stop loss. But if price were to come up here, give yourself some room above this. Then you'd probably want to exit the trade and accept the loss. But what we'd want to see happen here is price comes up here, retests this left shoulder, and then goes down. If it retests this right neckline again, that's a great place to either move your stop loss to your entry, thereby reducing risk. Or down here, you can also lock in some profit. So for example, if we entered here and, here is a 33 points. So add at least maybe 12 to 15 basis points as a buffer. So that's about, 50 points. So yeah, here you'd get a 1-to-1. Down here, you'd be almost at a 2-to-1 to lock in profit. And of course, you can go further as well. But that is how I would trade Tesla based on purely the charts. Was that helpful, Paul? And then I've got 1 minute. I'll just look at one more. The Aussie US dollar daily chart. Let's quickly look there. I fit it in very fast because I know I'm almost out of time. Awesome, Paul, you're welcome. So the Aussie chart, let's do top down. Let's look at the annual first. So the annual chart, we've just recently rotated down a couple of years ago. Recently, I laugh. So we're in a downtrend on the yearly chart. Let's look at the monthly chart. In a downtrend on the monthly chart, making lower highs, lower lows. And then on the weekly chart, in a downtrend as well. I'm going fast. For those of you that were on here, you could see, we were going up, making higher highs, higher lows. We rotated down below this left shoulder. So really downtrend there. In terms of looking at some monthly support and resistance to trade off the daily chart. Let's see. The levels I would be watching are this level. So you'd be looking for a sell opportunity, but you'd want to watch that. If price were to establish itself below this, then you could sell at a pullback. You could use this level. It's a more minor one. It's where price is now. But if you go down to the daily chart and you see a pattern around that level. So at this point, we have the high. If we go below this, this is what I'd be looking for on the daily chart. We need to go below this level. And once it does, you could have a sell order here to go down further. So we have the head, we have the left shoulder. We've breached the left neckline, or we're coming close to breaching it rather. Once it goes below this, the wick of this candle, then in my opinion, it would be qualified on the daily chart with a head and shoulders for a sell opportunity. We would want price to pull back up here. And that's where I'd have my order. Stop loss a little bit above this, take profit at least at this level, or reduce your risk at that level at a minimum. Thank you guys